Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my micro bullish scenario where we are looking for a three-wave structure, A, B, C expanding flat, where currently we are working on that wave B, so we expect more upside to finish somewhere in between the most common target area for wave B and wave Y, which is between 31.9k and 32.6k, which is in very nice confluence with the 2022 range highs as well, for there may be a liquidity grab and then a sharp move to the downside in a wave C. Now what you see on the chart over here in pink is a bars pattern, and that is a copy from previous price action that I then overlay on top of the current price action. And I took this bars pattern from the drop that we had over here on the chart. So over here you can see this drop over here was also quite difficult to count. Was it a 1 2 1 2? No, it wasn't. Eventually price moved up. It wasn't an easy structure, eventually in like a double zigzag, but it was a sharp move to the downside before then a return to the upside. And that is the chart part, or the part of the chart that I copied and then overlaid on this price action. So preferably for this wave X, this low over here is then the end for continuation in a wave Y, because as price has proven in the past, having this structure on the chart and then finishing here can be a three-wave structure for then continuation to the upside. Now, if you then do look at the target boxes, price actually just missed out on hitting this target box right below, which is between 30k and 30.2k, which includes the golden pocket taken from the low of wave A to the high of W. As you will see over here, the golden pocket is still untouched, and it also includes the value area low of this range on the 2 hour over here. You can see the blue line, the value area low of this range has not been touched. Actually, yesterday the point of control of the range was here, but it now moved to the upside as price is ranging at this level. So currently price is below the point of control, as you can see, and the value area low is then always an interesting area. If we then go to the second scenario, then in this scenario we are expecting an impulsive structure to the downside in again an ABC, but this is a regular flat ABC, where the 0.9 is a minimum target for a regular flat, after which you then expect a move to the downside. The most common target for a regular flat wave B is the 1 to the 105, but as you can see, that hasn't been reached. The 0.9 is simply a minimum target, a bit more rare maybe, but that is fine for then an impulsive move to the downside, where the target area for wave C over here is between the 1 and the 1.236, taken from the high to the low of A to the high of wave B, which is sitting between 29.4k, basically the low of this wick, and 28.9k, which includes this target box. And that is actually quite nice, as this target box is an area of interest we've been looking for a while now, between 28.8k and 29k. If we then zoom in to this structure over here and put the impulsive move that we currently have potentially on the chart, then you will see I counted this as then a 1 2 1 2, and then we have 3 4 5 to finish 3. Then we have a corrective wave 4 over here, and then looking for a 5 to the downside. Now this wave 4 is invalidated the moment higher time frame candles are closing above the 0.5, and I currently put the invalidation on top of this lower degree wave 4 over here. Now usually a wave 4 of a higher degree is finishing its structure inside of a wave 4 of a lower degree, which means at a minimum level of 30.6k, which, as you can also see, price didn't reach just yet. So that's quite interesting. Then we have the 382 that isn't touched. That's the most common target area for a 4, but in general the 236 to the 0.5 is a well-respected area for then potentially a wave 4 high, for then continuation to the downside in a wave 5. And then if we do look at that wave 5, we come back to the support area that I already mentioned earlier, which is between 30k and 30.2k as a potential area of support for then this to be a wave 1, then we get a wave 2, and then eventually a 3 to the downside. If we do look towards the upside, then we have a resistance area over here. So if the white target box is eventually going to be taken in either this being a wave X and you're going to be looking to the upside in Y, or this is going to be an impulsive structure to the downside, then the target area over here is interesting resistance between 30.9k and 31k. If we then go to the CVD divergences, there's a lot going on here, but it's on the bearish side. So we actually had a bearish CVD divergences over here, lower high on price, higher high on the CVD, as I will show you in a second. The target was this low, which has very nicely been reached for then eventually a bounce. And this bounce is creating second CVD bearish divergences, or second bearish CVD divergences, I should say, which is less preferred for me personally. But it is still a bearish divergence where the target is this low over here, sitting at 30.3k. So if price is going to move down, takes this low, then the divergences locally are neutralized. If we go to the chart over here, refresh for a second and put it on the 15, then you can see price, lower high on price, higher high on the CVD. This was the first bearish divergences, which are the ones I usually prefer, and that one moved to the downside and played out. Then you get a wick, price moving to the upside once again, creating once more bearish CVD divergences, because this high over here still creates a higher CVD divergence. So again, lower high on price, but a higher high on the yellow CVD line, bearish CVD divergences. There is absorption of market longs over here for then potentially that push to the downside. Now, trading wise, of course, I have a strategy, personal developed strategy, which goes a lot further than this. I have many different entry requirements and rules, but from a trading perspective and CVD perspective, preferably the first CVDs are most trustworthy and the best probability. And the more CVDs you get, so this is then the second, if this one would play out and you get a third, like the more you get, the lower the probabilities become, you know, and it is a probability game in trading, of course, but whatever it is, right, you need your own plan, your own strategy. There is no financial advice in any of the videos. That whatever you do, you need to look for your own entry requirements and then trade those. If we then look at the news, we have some news today at 4 p.m. Central East European time. We have high impact news as dedicated or shown here by the red flag. So you could expect some volatility at 4 p.m. today. So make sure you trade safe. And then finally, if we go to the probabilities section and I zoom out, it's actually the following, quite neutral, but if price is going to move to the downside first and takes this local low over here, I would be looking at potentially that impulsive move to the downside. And if price is going to move to the upside first, I prefer to be looking at the WXY scenario to the upside. So wait and see what price is going to do more locally, as it is quite difficult to count this move to the downside, which is also the reason why you don't see me having any counts over here, because it is not clear at all. And that's why I stay on a little bit of a higher time frame, because that's a tip. If you don't really know what's going on the very low time frames and it's very difficult to count, just zoom out and make sure you check what the scenarios are on the little bit higher time frame, and these are currently my thoughts. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.